Inflation has surged amid the war in the Middle East. CPI now running at about 3.3% year over year, with a 0.9% monthly jump that is up from 2.4% in February, marking the sharpest increase in about 4 years. Meanwhile, consumer sentiment, that's how Americans feel about the economy, has fallen to 47.6, one of the lowest readings we've seen. Joining us now is Tim Nyland, Co-Chief Investment Officer of Synergy Asset Management. Tim, good to have you.
Very nice to be here. Thank you for having me.
You know, this looks like a split report, doesn't it? Headline inflation is heating up 3.3%, but core inflation, that's removing food and energy, that's holding at about 2.6%. What's that about?
That's a really good point. That is true for now. We just haven't seen the spillover effects yet come through for the core read. We're expecting that here in the next month. Keep in mind, viewers should keep in mind that throughout the month of March, average crude oil prices were around $80 a barrel, and now we're seeing that obviously much higher. So we will see that spillover effect hit other sectors and industries and show up in the core read in the future months.
I guess it all depends how much longer this conflict is going to go on in the Middle East. I mean, OECD had warned that if this conflict remains persistent, U.S. inflation could reach 4.2% this year.
Yeah, it could. At this point, we are expecting it to be transitory. You saw when the original CPI print hit, it did provide some breathing room for the Federal Reserve in their near-term policy response. You saw the short-dated treasuries actually fall, and then obviously when the Michigan consumer sentiment number came out, those treasuries sharply reversed. So obviously there's now a divergence between Main Street and Wall Street, if you will.
Yeah, we're going to get to the consumer sentiment in just a bit. But what about those interest rates? Like, we need them to come down. We have been for a while now. So if this inflation spike is being driven by, oil, supply chain shocks, hopefully that's transitory from the Middle East, does that give the Fed cover to stay on hold, keeping interest rates higher for longer?
It does provide the Fed cover. It basically got the user. Your viewers need to remember that the Fed largely controls the short end of the yield curve, and then inflationary expectations, for the most part, drive the longer end of the yield curve. So, to the extent those longer-term inflation expectations remain rooted at a higher level, we can expect those interest rates to remain higher for longer.
Okay, consumer sentiment just dropped. 47.6, one of the lowest readings we've seen. That's how people are feeling about the economy. Not good, Tim.
Not good. This is an interesting number because, again, it shows that divergence between Wall Street and Main Street. Here we've got one of the largest supply shocks in history with regard to energy pricing. And we've got the stock market, sitting near, pre-Iran war highs. So, what we're looking at here in terms of consumer sentiment is actually a lower read than we had in the 2022 inflation shock era, as well as even the low of the University of Michigan sentiment read during the crisis with the tariffs last spring.
Yikes. Hopefully this turns around fast. What should everyday Americans be paying attention to right now?
What we need to be looking for right now is just guidance from the boardrooms, and we're going to get that starting next week with corporate earnings season. We really need to get a good idea of where U.S. corporations see this playing out in terms of their revenue growth, in terms of any margin pressures that are going to come through, and what that's going to look like. We basically have several different drivers in the economy. Obviously, consumer spending is probably the largest, but we do have a Federal Reserve that stands accommodative, and we do have a lot of AI spending and government spending to help supplement that. So the next couple months will be instrumental in determining where we go from here.
All right, Tim Nyland, Co-Chief Investment Officer of Synergy Asset Management. Appreciate your time today.
Thank you so much for having me.
You got it.